she will record it. There we go.
All right, thank you. Good morning, everybody. Thank you for joining us. Everybody's week's going well here. We wanted to cover the updated Hometown Heroes program and the changes, that had happened between the old Hometown Heroes program and this one. And anything, you can stop me if Brittney, if I miss anything you want to add in on, if you want to, take any parts, that's fine as well too. If anybody has any questions, you can put them in the chat, or you can just, speak out, fine as well too.
Yeah, I kind of want to preface it from the beginning in case anyone has to get off, and then I'll say it again at the end. But we're going to go over with you the parameters of the program, updates to what they've changed about it. However, we don't expect you guys to be pre-approving these buyers yourself. We don't expect you to remember all of these details and the exact numbers. This is basically to get it out there, to market to your database, have conversations with people. If you think at all they're in the realm of being able to take advantage of this program, then great. And if they don't fit into this box, then we're happy to get them into another type of loan or working towards this or another type of loan. So anybody, basically just get them over to us and we will determine if this is the right program for them. But this is such great information to get out there to as many people as possible.
Yeah, and there's lots of little nuances, and just going off of what Brittney says, you do not need to remember all this stuff. Lots of little nuances with the different programs. Now this is a Florida housing program, so you all may have heard it referred to as the Florida bond program. So there's bond funds, and then there's also other type of funds from the state of Florida. But you may have heard it called the Florida bond program. The Hometown Heroes program previously was just for first responders, firefighters, nurses, doctors, people in police officers, people in the military. It was for licensed medical professionals. So that's what it was previously. And we had funds all of, the last, year or two, probably, Brittney, something like that.
Yeah, it opened up in June of last year. So we had a full year of it.
Okay. So, and funds basically lasted the whole entire time, the whole entire year, almost, with the exception of like a week or two. They ran out at the end. Now, with the new guidelines, it's, it can include all those professions, but also it includes somebody that's working for a Florida employer with a Florida location. So if they're working at United States Post Office, they're a teacher. If they work for Grove Financial Credit Union, they're a nurse. It's any Florida-based company. Now, there's $100 million of funds available, dollars of funds available. So our contacts at the state of Florida says, these funds are going to go faster than what they did last year. They're not going to last the whole entire year. So once the Hometown Heroes funds go away, then it will revert back to the normal Florida housing programs, which are the Florida bond program, which you can do FHA, VA, USDA conventional. The bond program, and there's also what are called TBA programs, which have higher income limits, but those interest rates are higher on the TBA programs than they are going to be on the Hometown Heroes program, and also higher than on the regular conventional FHA, VA bond loan products. So this
Hometown Heroes product is way more of an open filter for a lot more people. It has the highest income limit, and it has the highest amount of assistance that you're going to get. So once this runs out, we're kind of filtering into a lower parameter there. There's not as much in assistance that they will get, and the income limits are a little bit lower. So basically now is the time to take advantage of this program if anyone qualifies for it. They're just not sure because it's so wide of the parameters, how long this is going to last.
Yeah, I'm sorry about that. My screen, it froze on me. All right, so here's the beginning of the presentation here, Florida housing, what's changing, what's staying the same. The 100 million of funds, the state of Florida said will probably, if they had to guess, last 4 months. Sandy Smith, Chip White, with the Florida housing, those are our two main points of contact. They had actually suggested to the Florida legislature that they leave it with just the professions that it was at before, you know, military, people in the military, the nurses, first responders. However, the state of Florida wanted to roll it out to Florida-based companies. So that's what they did. So we'll see how long it lasts, and then they can replenish the funds. I don't know if they can do that prior to next June or not. From the sounds of it, it sounded like they could potentially replenish them next March, but I don't have all the details on that because the funds haven't ran out yet. The says what's changing. It adds 2 members to the FHFC board of directors, one appointed by each lender. I guess that's not really that important. Occupational requirement, again, that's no longer applying after reservations made after July 1st. How we make a reservation, we have to have, the buyer has to be under contract. They have to have the loan conditionally approved, appraisal in, homeowners insurance quote in, and title commitment in. So that's what we need to reserve the funds. We only have 15-day rate locks on these. So we're not locking them in until we're within 15 days of closing. So you don't know what the exact interest rate's going to be until you're within 15 days of closing. So that, not a lot of lenders have this program. There are other lenders other than us, of course, that do have this program, but not every lender is set up with this, with the Florida housing. So, you really want to make sure you're working with somebody who knows what they're doing, because in this volatile interest rate market where you have rates, that may increase 0.25%, 0.5%, or decrease, possibly wishful thinking. But that somebody, could have qualified for the program 30 days ago, but if rates went up 0.5 point, they may not qualify now. So, you want to make sure that a buyer is not going up to the tippy top of what they're qualified for this program to play it safe. And for one reason or another, I do feel like, we have our fair share of clients that are going up to the tippy top. So, making sure you're getting, getting a homeowner's insurance quote in the beginning of it. If it's in a flood zone, making sure, we're getting a flood quote just to make sure, if rates do go up, not to scare the borrower, but, that they're still going to qualify if the rate's 6.5% or 6.75 or 6.875 or 7%. Buyers must work for a Florida-based company, meaning the employer must have brick and mortar location here in Florida. And they have to work 35 or more hours per week as well, too. So that, Brittney, correct me if I'm wrong, that's just one of the buyers that is on the loan has to work 35 hours or more per week, or be salaried, or be self-employed.
Yes, and this is a little bit deceiving, I feel like, where it says Florida-based company. So we have a lot of questions about that. It doesn't have to be the headquarters of the company. It doesn't have to be their only location is Florida. Just has to be an office or a location of the company needs to be in Florida. So it doesn't have to be a Florida-based company as in that's only where they're based out of or headquarters out of. It can be like Chick-fil-A and they work at a local Chick-fil-A that's in Florida.
Exactly. Or VanDyk Mortgage, like our main corporate office is up in Grand Rapids, Michigan. We do have another one in Clearwater, but Brittney and my office is in Tampa, so we're good. Right. Okay, and then for self-employed person, you're not going to have a paycheck saying you're 35 hours. So for real estate agents, if you want to utilize this program, we're going to utilize your last 2 years of tax returns, and we're going to qualify you based off the last 2 years of tax returns. And they're going to assume that you're full-time. So the buyers have to execute a certification form, basically that, states on there, that they're working for a Florida-based company. Honestly, I've never read through this whole entire form. But I'm full-time employed here, 35 hours or more. I'm purchasing a property that will be my primary residence. I will be a Florida resident. I'm a first-time home buyer, and what first-time home buyer is defined by for these Florida housing loans is they haven't owned a home as a primary residence in the last 3 years. If they're on grandma's deed on her house in Ohio or their parents' deed, and it's a home that they haven't lived in the last 3 years, they're still considered a first-time home buyer. If they're on their parents' deed and they're living in their parents' house, that's a different story. So then they wouldn't qualify unless they're a veteran or in the military. If they're a veteran or in the military, they can actually own a home currently as a primary residence and get another one. There's no cost for this Hometown Heroes program. There's a free online homebuyer course that they have to take and get a certificate for, but that's free and it's online. By the agent.
And we provide that to them.
Yeah, we'll provide that to them. So there's no reason, I don't tell them to do that upfront ahead of time, but we want to do it after they go to contract, but they don't have to do it like right now. So if people ask if this can be stacked with other programs, City of Tampa, City of Largo, City of St. Pete, you can, but you're certainly, you're probably not going to be loving life doing those type of programs and trying to stack it. Because 9 times out of 10, I tell people, for those city programs, you run out of time, but if they run out of money, the property doesn't qualify or the buyer doesn't qualify. Like, for example, and then an agent asked about the City of Tampa funds and stacking it. Well, for the City of Tampa funds, us lenders have to go in and take a lender certification course it used to be every year, and I think it's every 2 years now. And the realtor now also has to go in and take that course as well too. And like, they can't even like put a contract on a home till they're approved for that product. This, Hometown Heroes program, Florida housing program, super easy. We underwrite it. Doesn't have to go to the city or the county. We underwrite them ourselves. So it's very consistent. We can close quickly. So stacking those programs is not an easy feat. And with stacking those programs like the city, like some of the programs like that, they'll require the buyer to provide a home inspection. Again, this is on the city or county programs, not on this Florida housing program. They'll require the buyer to provide a home inspection, and then the city will order their own home inspection, and their home inspector will use the home inspection that the buyer got. So that usually throws a wrench into the system because there's issues that they want taken care of that the seller a lot of times won't take care of. Plus, some of them you have to go pick up the check in person. Some of them they won't like, they will only cut the check certain weeks of the month. So again, this program is so much easier just to keep it by itself. And if you need any help, like in a way, talking the buyers out of doing the stack, we can help them out with that. We can try, but worst case scenario, we stick with this. Self-employed buyers, they need to have their company registered through Sunbiz or provide their most recent 1099 to qualify. So if you're with Caldwell Banker, Future Home Realty, Keller Williams, and you're out of Keller Williams Tampa Properties, Clearwater, Winter Haven, wherever, Fort Lauderdale, we just need that 1099 to show that the company's registered through Sunbiz. So if you're if you're a real estate agent, you're probably, and you don't have your own company set up, then we would just get a copy of your most recent 1099. What is changing? So it's 5%. It's still 5% of the total loan amount, and it's capped at $35,000. So if you got a $400,000 loan amount, you're getting $20,000. You get a $50,000 loan amount, you're getting $25,000, and so on. It's a minimum of $10,000.
So if you have somebody that's buying like 175,000 purchase price, they're still gonna get at least 10,000. So it helps those people with at the layer. Yeah, if you can find something, but it helps those people with the lower loan amounts too.
And the 5% of the loan amount, it's an interest-free loan, and they don't have any monthly payments on it, and they'll pay it back whenever they pay the loan off. That's either refinancing or selling the home. And if they move out of the home and they rent it out, then that amount is supposed to become due and payable as well too. Says the Hometown Heroes second will be available with the bond program as well, effective July 1st. This option is being provided since the bond program often offers lower interest rates than the Hometown Heroes program. That's not always the case, but a lot of times it does. But the income limits are lower on the bond program than they are on the regular Hometown Heroes program. Let me just look at my chart here. So in our surrounding counties, Hillsborough, Pasco, Pinellas, Hernando, the bond program for a family size of 1 to 2 is just under $87,000. And now that's in household income for the bond program. For family size of 3 and up, it's just under $100,000. It's $99,935. That's family size. So that's husband, wife, if they got grandma living with them and we know about it, it's total household income cannot exceed those. For the Hometown Heroes program, they can make up to just over $130,000 in income, $130,350. And that is just for the buyer that's on the loan. So if the husband or the wife make $130,000 and we're doing the regular Hometown Heroes program, and the other spouse makes $100,000, but you only need, one of them on our loan, then we don't need to count the income for the other person and they still qualify for the Hometown Heroes. That is not the case for the bond program. For the bond program, it's household income. So we have to count everything up. And they'll project that going forward too. So, if they made, $88,000 last year on their tax return and they're just under the threshold. However, this year they got a raise in their salary and they're going to make, $95,000 and they were a family size of 1 to 2 for the bond program, they would not qualify anymore for that. But Hometown Heroes is just income that we're putting on what's called the loan application or the 1003. So like if they make a salary of $130,000 a year and they get bonus income of $30,000, $40,000 a year, and we don't need to count that bonus income, they can do the Hometown Heroes program just using the base pay. I had a VA buyer, active duty military. She was on salary and she also got housing allowance from the VA and also rations allowance from the VA for food. And the housing and rations allowance were on her, what's called her LES, which is their pay stub from the VA. That put her over the income limit. However, we did not need the housing allowance or rations allowance for qualification purposes. So I left that off the loan application and she qualified for the Hometown Heroes program. She got down payment assistance. So pretty cool option. It says bond considers spouse, and even if the spouse is not on the loan. They do allow for non-occupying co-buyers. Again, you don't need to know all this, but like on the bond program, we don't have to count a non-occupying co-borrower. That'd be like a parent co-signing to help with qualifying. We don't have to count their income in the income limit threshold. We can still use it for qualification purposes, but we don't have to count it in the total household income. However, on the Hometown Heroes program, we do have to count it. Like if it's on the loan application, we have to count that and it would need to be under the $130,350. So again, you don't need to remember all this, but there's little nuances. So, let us figure that out. And, we'll keep you all abreast with what's important that you would want to know. So your first-time home buyers, they haven't owned a home in the last 3 years. We already covered that. Again, that doesn't apply to active duty service members. So military, 0% interest-free loan, second mortgage. We covered that. And it's different in every county. Okay, so Manatee County is not the same as Pinellas County, Hillsborough County, and Pasco County. However, Hillsborough County, Pasco County, Pinellas County, and Hernando County are all the same. Polk County is different. So we can run it like we have our guidelines that we can go in and see what the income limits are for each county. What property eligibility? It allows for single family homes, condos, townhomes, and 2 to 4 unit properties. I don't recall ever doing multifamily on this product, but it does allow for it. For condos, we have to go through the normal approval process. Getting the condo project approved up to Fannie Mae or Freddie Mac standards, and for FHA up to FHA standards. It does allow for manufactured housing. Does anybody have any questions? Sorry, I should have asked you that a little bit ago on anything I covered so far.
about mobile homes, double wides, any of those?
That's
Hey, hi,
our
this is
favorite.
Ramon. If the person lived 3 years, he had the home for 3 years, could be qualified as a first-time home buyer or not?
If they haven't owned a home as a primary residence in the last 3 years, they would qualify as a first-time home buyer for this product, for the Florida housing product. For a regular conventional loan where you're not doing the Florida housing down payment assistance, for a regular conventional loan, the definition of a first-time home buyer is you can't have owned a home in the last 3 years at all. But for this product, for the down payment assistance, Hometown Heroes or Florida Bond, they just can't have owned a home as a primary residence in the last 3 years.
Okay. And how about for investment?
No, has to be a primary residence only.
Thank you.
And yes, Ron, double wide manufactured homes is allowed. Only double wide and built after 1976.
Yeah, and keep in mind for manufactured housing, for homeowners insurance, Citizens now added verbiage on to their homeowners insurance policies if the manufactured home, mobile home, consider the same thing, was built prior to 1994. So between 1976 and 1993, Citizens now will put on their homeowners insurance policy that it's cash value on the replacement costs. It has always been cash value on the replacement cost with Citizens. However, they didn't start putting that on the homeowners insurance policies until recently. So now that's why you're hearing lenders are having trouble closing mobile home loans or getting insurance, homeowner insurance on mobile home loans if they're built between 1976 and 1993, because Citizens was the major player for that homeowners insurance. And they're now putting on there that they will not replace the home. They'll only do cash value on the home. So lenders are not going to be okay with that. So to get a policy, a home insurance policy, it's going to be more expensive to find one. We've had some where they were $6,000, $7,000, $8,000, $9,000 to get homeowners insurance for a manufactured home built between 1976 and 1993. So most important thing, if you have a buyer putting an offer on a manufactured home built between 1976 and 1993, I would get a homeowner's insurance quote, a couple of them, and then run it by the lender to make sure it's good before going too far down that path. The manufactured housing also, the debt to income ratio requirements is lower, where on the regular Florida housing program for single family, condo, townhome, as long as the debt to income ratio is under 50%, and that's what they're spending of their monthly income on the house payment and the bills in the credit report. And as long as we get a computer generated underwriting approval. For manufactured housing, it has to be under a 45% debt to income ratio, and I believe they need a 660 credit score, where on the regular Florida housing program, it's a 640 credit score. Brittney, am I right on all this?
Yes.
Okay. Okay. So all borrowers are restricted to one-time participation in the Florida Housing Homebuyer Loan Program. So they can only do it once. And that is.
We also have a lot of questions about how long it takes. It takes just as much time as a regular loan. Now, regular loans, sometimes we can get things taken over from another lender for you and closed in 8 business days. I wouldn't recommend that for the program, just because we have to make sure we're following all of the program guidelines when they're underwriting these loans. But for the most part, same timeline. So if you need to write a contract for 28 days to get your offer accepted, that's fine. A lot of people think these take, or they've been told by other lenders that don't offer the program, trying to steer them away from it, like, oh, those take a long time, you might need 45, 60 days to close. No, that is not true. Same exact, can write a 30-day contract, you're totally fine.
If it's a manufactured home, you want to make sure, I would give yourself, like on a manufactured home, a little bit extra time on a manufactured, because if it's a government program, FHA, VA, USDA, you have to have the mobile home foundation inspection done. And the conventional loan, and there's been any additions onto the home, conventional will require the mobile home foundation inspection typically too, if the appraiser mentions there's been an addition to put on the home since it's basically been there. And that being, you know, screened in front porch, screened in back porch, carport. The mobile home foundation inspections, they're generally running like $400 to $500. And that will say if the tie down straps like are the correct distances apart. And if they're not, you know, then that would need to happen prior to closing. So, you know, that can sometimes cause a delay. You want to make sure, like, if a property's in a flood zone and it's a manufactured house, that you there's extra guidelines which are come into play with that. So ideally staying away from a flood zone if it's a manufactured home. Again, manufactured is a mobile home. Like for these buyers, we can get them approved by underwriting, you know, while they're out and about looking with you all. So then we can close them quicker as well too. So, you know, encouraging the clients, you know, to get us, you know, their income documents so we can get them underwritten. And then all we need to do is order an appraisal and reserve the funds. So the quicker we can get it, the better, especially like in, you know, the volatile rate market that we're in. Fortunately, this week we've seen some improvements in rates for the first time in a long time. So that was a blessing.
Yeah, this week has been positive for rates, so.
Yeah, I have a question. Let me see if I understood right. I misunderstood or I understood correctly? Like anybody can qualify for this type of loan. I thought it was only for first responder, like a nurse, doctor.
Yes, it was for the past year, from June of last year to June of this year. It was only for frontline type of workers. And as of July 1st, they opened it up to any first-time home buyer that works for a company that has a Florida location. So that's why we're making this big announcement. It has opened up the floodgates to a lot more buyers.
Excellent.
And definitely get them in as quickly as possible, because this is so broad. We don't foresee the funds lasting for a long time here.
The other question I have is, do you qualify the borrower, like the person to do the qualification, or I have to do the qualification? Because you give me a lot of information. But how does it work?
Yeah, we would qualify them in our pre-approval process. We qualify them for the program. Say for instance, they don't quite have a middle score of 640 right now, but they definitely need the assistance funds. We're going to work with them to help them get their score to the qualifying score so that they can take advantage of the program. So yeah, we do all of that. So that's why I wanted to preface this call by saying, you don't have to remember all of the details. You don't have to ask them what their credit score is, ask them how much they make, all of that. We just want to get this out there, get your feelers out there. Anybody that you know that hasn't owned a home in the past 3 years may qualify for this program. So get them over to us or get their number sent over to us and we will call them. We're happy to reach out ourselves and get them pre-approved for this.
And worst case scenario, if these funds run out 4 months down the road, 5 months down the road, they would still be eligible for the Florida bond funds, which is $10,000 of down payment assistance. And that no longer requires the 1% origination fee. So that used to require a 1% origination fee. So if you had a $300,000 loan amount, that was a $3,000 origination fee. That now is gone. So that $10,000 will go further, you know, it'll go further, and you can get some.
Yeah. Let me ask you something, another question. Like if is a family member can be a collateral, or it have to be only one person have to meet other criteria?
Just a relative, like it could be brother, sister, mom, dad, grandma.
Can be collateral, right?
It could.
Yeah, they can be together, right? Like it's not have to be only one person.
Yeah. You got a few people. You got a boyfriend, girlfriend, husband.
Okay, got it. Thank you.
Sisters. Yeah, and then we also do, just so everybody knows, we do a Friday call every Friday from 9 to 9:30 for all the agents. So if you want to jump on that and ask any questions, we have special guest speakers on there usually once a month. We had the property appraiser on there once. We had you know, we have a title company on there. We had Lindsay with Florida Best Quote and her staff on there several times where they'll go over all the different insurance changes, which there's a lot, you know, of those happening. And yeah, we'd love to have, you know, you all attend when you can. It's from 9 to 9:30. It's short.
Yeah, even if you just kind of throw it on, we send out a text message reminder to you about 15 minutes before the call every Friday at 9. Hop on, even if you're getting ready for the day or driving to your next appointment, just have it on in the background because we're always going over things like this and updates to the industry.
Excellent. No, I asked so many questions because after this call, I'm going to talk to a client about it that he say at 1 o'clock. So I want to get the most information I can from you guys in order that I can help my client, serve my client better.
Yeah,
Thank you.
definitely. Yeah.
And we can get everybody a copy of the PowerPoint out. Gabrielle, we have everybody's email addresses that we can send that out to them, and that'll have our contact information on there, right?
Correct. Anybody who registered with their email will get a copy, and we'll also post the video on our Facebook page and our YouTube page as well.
Okay, we have bilingual loan originators as well too, English, Spanish, if that helps out with your clients. That isn't me, by the way. But yeah, we got
Usually, how long it take to close from start to end?
A typical closing is fine. So a 30-day contract.
Okay. Okay.
A few days less, we could likely accommodate as well, but you know, a typical 30-day contract is just fine.
I mean, I got 20-day contract right now, like they had to do that to get the offers accepted.
Right, yeah, I mean, we can, you know, get it done. I just wouldn't suggest giving much less than that, but but we can, you know, just let us know what the situation is and we can try to handle it. Does anybody else have any other questions? We can open it up for a few minutes and see if there's any specifics.
I do.
Mhm.
So the buyer has to, is there any particular timeline for them to apply to both loans? I mean, Hometown Heroes and the regular financing for the housing, for the house?
That's a good question. Or no, for just regular financing for the house, this is just, yeah, you would just be pre-approved for the program, and that would also include your regular pre-approval. So it's just all encompassing into one. We take care of all the documentation for them. These funds just get applied at closing, so it just comes off of their cash to close amount. If they needed $40,000 to buy the house and they're getting $20,000 of assistance funds, they just need $20,000 on closing day. So just gets directly applied.
Okay.
So yeah, it's all encompassing into one. When we say that they're pre-approved and they're using this program, then you're ready to go start house hunting.
Okay, the second question I have, thank you, is what are the requirements for the property to have in order to be eligible? Let's say we are looking for properties, but this candidate can be, you know, this buyer can be a candidate for Hometown Hero program. And how can we as realtors can help them to select the property that goes along with this program, the requirement of this program?
There's no specific property requirements other than if you're looking at a manufactured home, it needs to be a double wide. But there's no property requirements as far as where it's located or condition of the home other than regular FHA guidelines, health and safety issues. If there's a broken window or something like that, that's going to be a problem with a regular loan too. There's no overlays for this program as far as specifics having to do with the property. So that's more so some of the city and county programs. They really can be very particular about where the home is located or what condition the home is in specifically. And they kind of try to find, you know, anything wrong with it to make that a little bit more difficult to get those funds, is our experience that we've run into. That is not what the case with this program.
I even did one, Brittney,
Thank you.
recently where they did an escrow holdback, like, you know, that something was wrong with the AC or they were putting a new roof on, and we were able to do an escrow holdback, like the sellers and held back some of the seller's fund. They put the new roof on after the closing. They didn't used to be able to do that on this program, but that's not like preferred, but
I understand. So the approval, the pre-approval letter would say if they are eligible for the hometown hero?
Yes.
Okay. All
Yeah,
right,
and
thank
we
you.
will obviously go over that with you too and let you know that that's the program that they're using.
yeah, I mean, if you prefer for us to just put on there, conventional purchase loan, we can do it like that too. If you feel the listing agents being a little squirrely, oh, I never heard of this hometown heroes program, down payment assistance programs, I hear that you can run into issues on those. Well, we can just put it as a regular or FHA loan because they are truly conventional or FHA loans. But
Yeah.
by default, we do put on there if they're hometown heroes or Florida bond.
Yeah.
We
Yeah.
Okay, excellent. Thank you.
I have a question, it's out of the scope, but do you do a foreign investor?
With this program, no. For foreign national.
No, not with this program, in general, you do it or no?
Yeah, we have portfolio loans like that, like, the investor no income document loans. They can couple that with the foreign national borrower loans as well too. So,
So I can contact you to get more information about it?
just go to Brittney for those.
Yeah, I was just gonna say, you can go to Shawn for those.
Yeah, I take the number that you put in the screen, and then I'm gonna call that number to get more detail about it. Thank you.
Yeah,
Yes, we're happy to help. We have a lot of different channels for outside the box lending products.
Excuse me, I have a question.
Yes, Hilda.
Are there, according to the new contracts, they're talking about some countries that cannot purchase properties in the US. Will this program is also part of those countries that cannot purchase properties in the US?
they have to be legally here in the US, so it's like a citizen, permanent resident. I've never specifically asked the question if they're here on a EAD, like an employment authorization document. I can look up the guidelines while, if anybody else has any questions to see if it says that. But like,
Yeah.
I'm not 100% sure if they're on a work visa or the employment authorization document. But citizen works, permanent resident works. That is fine as long as they're, here legally. They need to have a valid social security number.
I'm sorry, there are some people that live in this country with a program called temporary permits. They have a number. Will these people qualify for this kind of program?
I don't believe so. Brittney, are you looking it up?
No, I'm managing the chat for some questions here. But we can get that information to you if we can get your specific scenario of what exactly they have, and we can ask the representative in Tallahassee about the program.
Not a valid social security number, I doubt it. Now, we also need to make sure we can do a 2-year work history. So I saw that question in the chat. So now, if we have somebody that's a nurse, she just graduated college, and she's only been a nurse for a month, we can college for the 2-year work history. If they are a teacher and they switch to a new school, no big deal. If they were a teacher and now they're working at, no financial credit union as a branch manager, on salary, we're just a 2-year history. Brittney, I think you even used one where you were able to use high school, their high school diploma.
Yeah, I had a super young buyer where we had to go back to even high school to have a 2-year history because they were so young. But I do want to, a couple of the chat questions are good questions in case people aren't looking at the chat and my answer. I just want to go over all counties in Florida. So again, this is not like a county specific, this is the state of Florida program. So if you have somebody that's buying in Orlando that you're helping, anybody in Florida, like any county, anywhere in Florida can do this program. And do they have to be employed a certain amount of time or relocating is okay? Yes. So basically the only one to rule out for this occupation wise is somebody that works remotely from their home here in Florida, and they only work for a company that's in Arizona, a small company in Arizona, and they work for them doing marketing for them remotely. That's the only time that this would not qualify because there is not a Florida location, brick and mortar Florida location for them.
All right, thank you.
So this is Jay Hart. Do you have to be a current Florida resident to qualify for the program?
She just said that, yes.
So, yeah, I mean, you can't be residing in another.
No, I mean,
living
if,
in another state. But yeah,
if-
if you're moving here and it's going to be your
Yes.
primary residence and you're going to be
Yes.
working for a company that has a Florida location, you're good.
okay, good. Thank you very much indeed.
Yes.
Can you
Course.
buy a new construction in this program?
Yes, I actually have somebody under contract closing in October. If the home is ready by then, that is doing the program because it's giving them more than what the builder would give them in, concessions.
Let me see if I get it right. This is not a grant, like a grant is gonna be forgiven down the line in 5-10 years. This, when you, like a refinance, you have to pay when you sell the house. How about if you invest, like a rented? What's gonna happen if you rent?
Yeah,
That is
there's
gonna be
no way,
an
there's
investment.
no way for them to really, track that. So if you sell or refinance, the funds are due back. If you keep it forever, there's no way to request those funds back.
Okay,
I mean, if they find out you're renting it, then technically you're supposed to pay them.
yeah, I don't hear you for some reason. You hear
Shawn,
far.
your microphone's really low, but basically, I think what he's saying is, you can't be buying this and then a month later listed online as an Airbnb or for rent, especially when it's still in the period of being serviced and the servicing, department is still doing all of the paperwork to get it to the final servicer. That is going to be a huge red flag. So certainly nobody that has the intentions of not living it as a primary residence, we would not want to put this, them into
Okay,
this.
got it.
We're recording this.
Any other questions?
Missed something or had a phone, we'll record this and we'll post this.
Yes, we recorded it and we will be sending it to you guys and posting it so that if you missed anything or got on late. Thank you for that. That's our main line and our team email address. Does anybody else have any other questions before we let you all go?
Thank you very much. Great information.
Yes,
I do have a question.
Mhm.
How long do you have to own the property? How long do you have to own it? If you wanted to sell it, how many years do you have to own it to sell it?
There's not a
Not a limit?
specific certain amount of time you have to own it. It's just the funds are due back when you do sell it. So and no matter if it's 3 years from now or 10 or 15, I mean, we haven't gotten there yet with these programs. Well, we might be getting close into a decade of doing these, but yeah,
Okay, good,
that is what we are told.
good, thank you.
Yeah, so and you can tell your buyers or any buyers that are on this call right now, we are a preferred lender with the program. We've been working with Florida Housing, e-housing for a long time, years and years. We do a lot of these loans. This isn't like a product that we barely see anybody doing. We do a lot of these. So we're very well versed in it and it's easy peasy. Again, oh, I also want to touch on, there's other county and city programs where the agent has to go through a class and you have to be certified. This is not one of those either. You don't have to be certified or have any sort of training you have to do. We handle all the paperwork, all the things, and it just gets applied at closing. It is very easy.
Good.
All right, guys. Well, if you have any other questions, please give us a call, email us, text us, any way you want to get a hold of us, but we're happy to help with this program and obviously all of the other loan products that we offer. Please let us know anybody that we can reach out to. It's best if you let them know that we're going to reach out and give us their information so that it's in our court to call them and get it started. and get them some answers. That's how we like to handle it best, instead of letting your leads float out there and waiting for them to give us a call. So please let us know who we can help.
Thank you. Thank you.
Thank you. Have a great day.
Thank you, guys.